All right. Welcome everyone. Welcome. Oh, hello. What's up, guys? All right. I think my audio is doing okay. Hopefully. Maybe. Okay. I think everyone can hear me correctly, right? Okay, so let's begin, guys. Okay, let me just bring down the music a little bit here. Alright, so as it says in the title, we're going to be going over specifically this biotech stock. Well, it's not really biotech, but it is focused in the area of biology, is what I would say, and specifically the technological side, right? And because it is a surgical robotics company, and that is PRCT. This is Procept Biorobotics Corporation. So I'm going to be talking about this first, and then I'm going to go over kind of what we can expect to see on Wednesday when the FOMC meeting results come out, the rate decision, along with Jerome Powell's very, very important news conference. Now, I'm also going to be applying what I say in that topic to the overall market, specifically the S&P 500 index. Okay, and obviously I'll go over the S&P 500 ETF as well, but I want to start off with the index first, since I know a lot of you guys also track and look at the SPX and along with SPY too. Okay, so that's kind of the overall schedule, very quick overview of what we'll be doing tonight. Okay, and also obviously we'll go over some tickers from the list of this week's CFO Swinger Watch Report as well. Hey, what's up, guys? Welcome, come on in. Make sure you guys hit that like button down below. Okay, we just began, so no worries, you guys haven't missed out on anything. Okay, all right, so first of all, let's talk about PRCT very, very quickly. So I know there's gonna be a lot of people here that are readers of the report, so you guys already know what's up with this stock, and you guys should know that we already began an equity position last Friday, right at this $37 whole number level, and so we had a nice bounce entry right at 37.10, and today it continued to do really well, right? We had a nice pivot away from 37.00, and we ended up going all the way up into 39.32 as the high today. But obviously, due to a lot of the market conditions and just the overall trend that PRCT is in, it's unable to continuously have a potential inflection point right at $37 to continue to move up higher. And that's the reason why, I've also stated in the report itself, from a technical perspective, if you go on the weekly or even on the monthly, there is a good, I would say, a 50-50, so a 50% chance that we could be seeing the prices coming back down to, like, $26 here. Okay, and that is the significant low support level that was made during the IPO, right? So during the IPO, and also during the kind of the price discovery phase, before we saw a huge burst higher as investors tried to boost the valuation of this company. And obviously that valuation of the company has completely cratered to the downside, and it's now the market cap is now sitting at let's see, where is it at? 2.11 billion. So this is basically almost a small cap stock, right? Obviously, it's still from a numbers perspective and from an asset class perspective, it is still a mid-class stock, but it's there. It's almost at 2 billion, right? That's the cutoff point, the threshold point where we see companies coming from small caps and turn to mid caps, right? So this one is still mid cap stock, but this is very, very close to being a small cap stock. And so if we go down to $26, okay, we'll most definitely be very sorely undervalued for this company based on what they do and where they work in, and they're kind of a leader, one of the only leaders actually in their space. They treat a condition called BPH, okay? And they work with a specific prostate condition in men, and this is a very minimally invasive procedure that uses water jets, right? You guys can just look at their website, their homepage, and they'll explain everything. All right, they even have the results from their own clinical data, clinical test results that they've done, and they had like 4 different like phases as well, if I remember. And so, you know, overall, the real world tests and actual procedures that they've done on patients and actual, you know, real world results have given them some pretty good results. So I also wouldn't be surprised if a larger surgical tech or surgical robotics company buys them out in the future, if that is something that this company is looking to do or interested in the future, if they're willing to sell their current robotic system, the Hydros surgical robotic system, along with their in-house AI assistant that helps with the aid of treatment for the BPH condition. So this is kind of again, this is all information that you guys can just literally look in their homepage. But if you guys really want the overall fundamental analysis that I've done, you guys can go ahead and take a look at the actual CFO Swinger Watch Report for this trading week. Okay, so PRCT, I would say right now it's still very, very undervalued. At $38 per share, it closed exactly at this whole number level here at $38, 38.00, and I wouldn't be surprised, again, if it went back to 26, but if it did go down to 26, I would be very intrigued as to getting a lot more equity in this position, along with actually opening up a leveraged position using option call contracts, right? Naked call contracts like that as well, especially leaps if it's available, since this company has a very limited amount of options available to its options chain. So, and also the fact that their own options are very, very illiquid. We don't see a lot of volume or even open interest in all of their strikes of every single contract, whether it be on the call or put side. So I'm not really interested in looking for an options position. But again, if we were to go back down to 26, back to the IPO lows, well, this significant low support level post IPO and obviously during IPO as well, I will most definitely be interested in getting a leveraged additional position on top of my equity position. Okay, so I really, really recommend you guys to take a look at this PRCT. It's something that you guys should always have on your watch lists, especially into the end of this year. There could be a very good possibility that we can continue to pivot, maybe continue to move lower, but I'm just predicting here at this point now. But you know, I would really love to see. So the bottom line is I would really want to see the price holding this $37 level here. And eventually pivoting up higher and stopping the bleeding here, and eventually coming back to a more and stable value, market value here for this company. Okay, so I would at least appreciate if this company can come back to a more midline asset class level of being a mid cap stock. And again, this is literally on the fence of becoming a small cap stock. So please watch out for this. Okay. Alright, so that's kind of it for PRCT. I just want to give you guys a heads up on this one, especially for all the CFO Swinger Watch Report readers that are currently watching the stream right now or watching the replay. I want you guys to continue to watch this name into the end of this year. This is a very, this is also not just a swing trade idea, but this is a very long-term investment idea as well, based on how the fundamentals are looking and shaping up, and based on what I told you guys in the report. So please go back to the report and read it. Okay? Alright, so with that being said, let's talk about the overall markets. So first of all, let's talk about the FOMC meeting. Okay, so as you guys should have read in the market summary section of the report, I specifically told you guys that well, based on the fact that we're seeing the expected recut, right, in September, okay, so this month, of 25 basis points, the markets have already priced in this recut. I mean, the last 2 weeks or even just last week alone, the market volatility has completely been crushed. And we are not seeing any type of wild moves, and we just continue to move straight up. In fact, we've been having so many consecutive gap ups in the past week or so, and to me, this is a very healthy bull run. However, we've gone up so much from the lows of April of this year. That's right, April has already passed. I know time is really going by fast here this year. Well, it seems like that every single year, but you know, it seems like we've gone through a huge time period for the markets and for the overall economy with this complete regime change from the Trump administration with this tariff regime. So, you know, right now, I think even if it's a very strong bull run, this entire run since I would say the beginning of the summer months, so I would say even just the beginning of Q3, okay, so since July, I think we have really just baked in, began to bake in the possibility of that rate cut or recut, excuse me, or the continuation of the rate cycle, cutting rates cycle that began in 2024, right? And again, if you guys remember, that was in September of 2024, so it kind of aligns perfectly to the continuation of this rate cut cycle for this month of this year, so September of 2025. So, and so now, obviously, there's every reason for the Federal Reserve and Jerome Powell to agree, have a whole consensus to cut rates by 25 basis points. Now, here's what I said in the report, right? So I said that if there is a plan, or at least they have made some thoughts of cutting by 50 basis points by the end of this year. Okay, and again, after this week's FOMC meeting, we have only 2 left. We have one in October and one in December. Okay, and so there's only 2 different possibilities and probabilities. All right, so obviously we're going to be seeing 2 rate cuts. I've told you guys this already back in I think back in June. It was either I think it was June, yeah, May or June. But I told you guys that there's most likely going to be 2 rate cuts, and I'm going to be sticking to that hunch of 2 rate cuts. And so if I were to continue that, okay, and if I were to apply that initial hunch to the rest of the FOMC meetings that we are either going to have another 25 BP rate cut, okay, either in December. Well, I would assume it's going to be December, because the Fed will most likely want to wait and pause again in October and see how this initial recut of 25 basis points this month is going to affect the overall inflation reports and labor market reports as well, and the overall economy. And so that's one scenario, right? And that's a very probable scenario, okay? And I'll obviously go over some probabilities as to how the markets can react to each single scenario. So again, that's the first scenario. Please remember what I'm saying right now. So that's going to be a total of 50 basis points, okay, of rate cuts by the end of this year. But now, here's the second scenario. Okay, so in the second scenario, we either get 2 rate cuts, so 1 in October and 1 in December. So we're going to get 3 rate cuts total by the end of this year, and all of them are going to be 25 basis points. Now that'll give us a complete total of 75 basis points that have been cut to the overall benchmark interest rate by the end of this year. Okay, and that's another scenario. And then the third scenario, okay, is if we decide to follow the exact path that I just described to you guys on the first scenario, where we pause in October and then we cut again in December after the Fed waits a little bit, a month, to see how 2 months, excuse me, October and November, to see how the markets are essentially reacting to the initial recut. So rather than focusing on another 25 BP rate cut in December, what they will like to do in this scenario is focus on a doubled size, okay, of a cut by adding another 25 basis points by cutting by 50 basis points, right? So they doubled the size of the rate cut that we're gonna get this week, 25 basis points, and they're gonna move that to December. Okay, so that's gonna be 50 basis points of a cut in December, and the probabilities of that have also risen as well. And so we have 3 different probabilities and scenarios here. Okay, so hopefully you guys understood what I said there. Okay, so I'm gonna go over them again, but I'm gonna be giving you guys what the reaction could be, or reactions could be, from those different scenarios, okay, from the market. All right, so in the first scenario, we'll most likely see the markets moving lower. Why? Because again, the markets have already run up into the anticipation for this rate cut. So once we have this rate cut, this eventual rate cut on Wednesday, the markets will sell off. Okay, at the minimum, we'll be seeing a down day on Wednesday or Thursday. Okay, and who knows? We might even end up being positive if we decide to skyrocket back higher on the last few hours of Thursday, or maybe by the end of this week. Who knows, right? But at the very least, I'm gonna be expecting a red day on Wednesday into Thursday. Okay, now that's the first scenario. Okay, and maybe in the first scenario that could kick off a chain reaction to the downside as we head into the weaker half of this month and into October as well. But I'm not gonna say that just yet, okay? Because in the second scenario, and that is where we see them cutting, okay, by 25 basis points every single FOMC meeting by the end of this year. Now, in this scenario, we're most likely going to get another push, the same scenario in the markets like the first one, where we're going to see a nice push lower initially from this rate cut this month, and we're probably going to follow the seasonal trends of weakness in the last half of this month. However, if Jerome Powell indicates that they're going to be expecting these 25 BP rate cuts in the next and last 2 FOMC meetings, so consecutive 25 BP rate cuts, so that's going to be a total of 3 rate cuts of 25 BP each, right? Giving us a total of 75 BP, right? We're going to be getting a pretty shallow pullback, which will be immediately bought back up in the markets. Why? Because the markets will like the fact that Jerome Powell is starting to act a little bit more swiftly, rather than being, staying relatively conservative with his actions and the monetary policy of the Federal Reserve by continuously being very strictly data dependent, and rather starting to cut in anticipation of worsening inflation and labor market data, right? So if that is indeed the case, right, the markets may actually try to cater to that and actually have a very shallow pullback and actually pivot back up very, very fast to the upside. Okay? So that is the second scenario. And so now for the last and third scenario, where we have the 25 BP rate cut this week, and then a pause in October, and then a massive 50 BP rate cut in December. Okay? So I would expect the same market action, price action, and trend to occur as I just described with the second scenario as well. Why? Because again, it's still going to be a total of 75 BP rate cuts by the end of this year, but also it's also telling us that Jerome Powell is being a bit more aggressive now, in a similar manner as the second scenario, where we see 3 consecutive 25 BP rate cuts, but rather in this scenario, we're seeing a much larger rate cut for December, while waiting out October and throughout November to see how the economy reacts, right? So I know this may be confusing, guys, but this is the probabilities that I have built up in my head that really make sense to me, right? These 3 different scenarios. So, I think in just trying to figure out how the Federal Reserve thinks and what they've been doing so far, I think all 3 scenarios are highly probable. And again, the last 2 scenarios will most likely result in a very similar market movement and price action, where we have a very shallow dip from now to the end of this month and all the way up into around middle of October, and then a very, very quick and swift move back up higher, a pivot back up higher, and we continue to see new all-time highs into the end of this year. Does that make sense, guys? Hopefully that makes sense. Okay. All right, there we go. I see some reactions there. Okay, perfect. Okay, so with that being said, okay, I really want you guys to understand that it's getting a little bit tricky here because of the fact that we're seeing a lot of changes within the Federal Reserve, a potential change in the Federal Reserve, and it's starting to shake things up a little bit in a not so positive way as with regarding to the independence of the Federal Reserve as the position of the most powerful central bank of the entire globe, right? So the entire financial markets of the globe, of Earth. So, it's gonna be pretty interesting and kind of almost scary to see, right? Of how the Federal Reserve could be almost not independent, and that'll be very interesting to see. Okay. So, with that being said, all right. Now, what is the most probable scenario that I'm personally thinking of is something that you guys might be wondering right now, right? So, to me, I think the very first and third scenarios make the most sense to me. I think they can, they'll most likely still be very strictly data dependent, and they want to see how this first 25 BP recut affects the overall markets and economy for the next 2 months, right? While they pause in October, and obviously November doesn't have an FOMC meeting until their December FOMC meeting. Now, I could be completely wrong. Again, this is just my own personal subjective thought. And if they decide to completely prove me wrong by saying that, especially Jerome Powell, if they say that they have plans to cut all throughout the rest of this year, this fiscal year, so in October and December, again, that could still be a very possible scenario. But I'm just betting on the fact that they might be seeing the first or third scenarios. Whatever it is, they're planning to continue to cut. Okay, they're planning to restart this rate cut cycle that they began in last year of 2024. Does that make sense? Hopefully that makes sense. Okay, now, as far as SPX goes, oh, and we're back. Okay. Sorry guys. So we had a little bit of connection issue with my my streamer here. My stream platform here. So as I was saying, so I would expect to see the S&P 500 index here at least moving 2% lower, so maximum 2% by the end of this week, or at least by the end of Thursday, or maybe even Wednesday, who knows. And the reason why I say this is that this much of a large move can occur within at least in 2 trading days, because of the fact that, first of all, we've seen volatility being absolutely crushed, right? We're just overall market vol being crushed. You can see this on the VIX, the volatility index of the S&P 500. And we've just seen just consistent consecutive gap ups with such low volatility that provided this huge, very, very easy run up to the upside and constantly hitting new all-time highs. So with a huge catalyst like this, with this upcoming FOMC meeting, and on top of that, the expiration, right, volatility, VIX expiration, and also with OPEX this Friday, I would expect to see even more movements back to the downside as well, as we kind of start to see more weakness and more windows of weakness actually in this entire uptrend that we've been seeing since the beginning of Q3, right? So again, even if we were to go back down to, again, this -2% from today's closing price, that'll be around a little over 100 points for the S&P 500 index, and we'll be ending up around $6,500. And now for the longer term perspective though, okay, or mid-term perspective is what I should say, if you were to continue to see some weakness, right, I would expect the markets to, now this is all speculative of course, at least move down by 5%, or at least near 5%, and that'll be around $6,300 dollars. Okay, and this is interesting, right? Because this is actually a pretty good area to pivot from if we were to move back down at least 5%. So it's a very textbook correction from the end of, for the last half of September to around the early innings, or at least the first half of October, before we decide to pivot back up higher and start to move up higher again into the end of the year and obviously for most of Q4. So if you were to follow that price action and trend, this is still pretty much a very shallow pullback after this entire run that we've made so far, guys, where I think we've run up almost 50% now. So if I were to make this as accurate as possible, right? Okay. Oh no. Almost 40% here for the S&P 500 index, so SPX. I think I was remembering what I said in the report about NASDAQ. So NASDAQ itself is almost at 50% from April lows, right? Which is amazing, which is absolutely amazing to me, right? So on the S&P 500 index though, this is still another huge milestone here since April lows, right? With today's close. So, you know, almost 37%, or again, nearly 40% here from April lows is huge, right? It's a huge move and a great performance for this entire year so far. And so a small pullback of 5% from today's closing price is nothing. It's absolutely nothing. Okay, so 6,300 would, I mean, who knows if you see volatility expanding just like that from Wednesday's catalyst, and also with the expiration along with OPEX, who knows, we might be going down within 3 trading days. That could also, again, that could also mean a trading day that from next week, or maybe even the last 3 trading days of this week, right? Who knows, right? We might see Thursday and Friday being the first 2 trading days where you just see an absolute big move down with volatile price action, and then next Monday might be the last 3rd day that can make us reach back down to $6,300. Who knows, right? So all I'm saying is that will be a perfect scenario where we see that -5% decline, a textbook correction, and also the kind of the lower range textbook correction from percentage perspective. And again, this will be a relatively shallow pullback and correction for the overall markets after seeing a huge run up since April's lows. Does that make sense? Okay, and so if you take a look at VIX today, it's actually pretty interesting too, because VIX was actually getting some bids, right? And VIX is staying relatively stable at this $15, well, not $15, but this 15 value here. And this value at 15 is acting as a very good area where we continue to see bids of VIX, right? And we're starting to see a lot of people trying to actually anticipate a potential volatile expansion, right? A volatility expansion in the overall markets after seeing the volatility being absolutely crushed for the last couple of weeks. Okay, so this is going to be a very interesting week. I would highly suggest you guys to trim some long-term positions that you guys open up a hedge, or at least open up one single short position on the overall markets by using index options, or whatever put options you guys want to use, right, on SPX or just SPY, right, again, either the index or the ETF respectively. So yeah, but that's pretty much it, guys, right? I don't really have much else to say other than I think just good luck. Right? I mean, we have a huge week ahead of us, so it's gonna be a very volatile week, most likely a very unpredictable week. But I can guarantee you guys, we're gonna be seeing some sort of a volatility expansion in the overall markets after seeing such a overall volatility crush for most of this summer. Okay, does that make sense, guys? All right. Okay, well, that is it for tonight, guys. Thank you guys so much for watching this late night stream. And again, my streaming schedule has changed from Mondays to Wednesdays, all right, at 8 p.m. Pacific Standard Time or 11 p.m. Eastern Standard Time. I'll be doing this and keeping the schedule until the end of this year. So please make sure you guys join when you can. If you guys are too sleepy, understandable, but at the very least, especially for the people on the East Coast, if you guys wake up early enough, since the markets open up a lot later than the West Coast here, in the Pacific Standard Time Zone, you guys should always try to watch the replays of my streams or any of my other uploaded videos before the market opens, because I always have some very important information, but most importantly, applicable information that you guys can actually apply and use as tradable ideas, right? Okay, and I'm saying tradable as in you guys can long or short depending on what I'm saying and giving you guys. Okay? All right. Okay, so for any of my current CFO Swinger Watch Report readers or members of the private CFO Discord, I'll see you guys tomorrow morning. And yeah, good luck to everyone else that is watching. I'll see you guys on Wednesday. Thank you so much for coming in, joining in, staying, and watching what I have to say.